Mad Money's Jim Cramer recently threw in his 2 cents on Tesla's record-breaking delivery report. He pointed out that Tesla should be viewed as a great technology company above all else. Although many analysts consider its valuation expensive, Cramer thinks it will seem cheap in the near future. Cramer believes that Tesla's car delivery rate in 2025 will be approximately 10 million cars, and that's how he expects people to look at Tesla's valuation. On CNBC's Mad Money Lightning Round, Jim Cramer said Blackstone Incorporated is a very good company. Despite having a giant run recently, he expects the stock to go even higher still. When asked about NIO, Cramer said he recommends Tesla, Rivian Automotive, Fisker, and Lucid Group over the Chinese automobile manufacturer. Well, let's find out why Cramer speaks highly of Tesla stock. Stay tuned. Sometimes things can and do go right, Jim Cramer reminded his Mad Money viewers. That's why when it comes to investing, you have to suspend your short-term skepticism to make long-term money. Despite a pandemic last year, supply chain woes, and rising inflation, the S&P 500 still managed to rally over 27%. So while you might think only idiots believe good things can happen, Cramer said it's better to be an idiot who makes money than a genius who misses out. So one particular case pointed out by Cramer was Tesla. Naysayers have assured us Tesla will never make cars at scale and certainly won't be able to do it profitably. Yet the electric car maker announced that it made and sold almost 1 million cars last year and made money doing it. Tesla shares have been rallying, yet many analysts still value the company on a cost per unit metric instead of looking at the company's true value. Tesla is by far the most valuable automaker in the world. However, the company's stock has for years been a major battleground on Wall Street as one of the most shorted or bet against names. Many bearish investors believe Tesla is detached from fundamentals and way overvalued, while bulls, they believe that the EV pioneer can continue to dominate the category, which is expected to grow in overall size in the years ahead. Cramer turned positive on Tesla roughly 2 years ago and has largely maintained that constructive view on the EV car maker. Tesla started 2022 on the right foot by reporting it delivered more cars than expected in 2021. Despite supply chain disruptions, vehicle recalls, and other various headwinds, Tesla's stock still performed very well in 2021. Tesla's investors have seen the stock rise more than 80% in the last 6 months. And if the first few days of 2022 are any indication, they'll see more gains ahead. Tesla is one of the most popular stocks among traders and investors on the main online discussion forums. So let's look at some of the top reasons why the electric vehicle stock has a great year ahead. Tesla's market cap is over $1 trillion. The company is priced according to the technology it offers, not necessarily by the number of units it delivers. It's currently among the top 10 most valuable companies in the world and trades at the highest price-to-earnings multiple, which is 360 times. That's 5 times more than the runner-up Amazon. But trends show that Tesla's output will start justifying its high valuation. The company recently reported it delivered a record-breaking number of cars in the fourth quarter of 2021. Tesla delivered 308,600 vehicles. This represents a year-over-year growth of 87%. Analysts had expected fourth quarter deliveries to be around 267,000. As for full year 2021, Tesla reported it delivered a total of 936,000 vehicles versus an estimate of 897,000. For 2022, the company is expected to deliver close to 1.5 million vehicles. Now, this should be no problem for Tesla, especially with its gigafactories in Texas and Germany coming online. One important factor that can't be overlooked is the Elon Musk effect. In a market driven by high speculation, assets such as cryptocurrencies, non-fungible tokens, special-purpose acquisition companies, and other disruptive technology trends, investors often seem willing to overlook fundamentals and focus on far-out potential. Tesla and SpaceX CEO Elon Musk is one of the wealthiest people on Earth, and for better or for worse, his voice has been very influential on the markets. His Bitcoin and Dogecoin-related tweets have caused buying and selling frenzies, and Tesla is under the iconic CEO's influence too. However, putting aside Elon Musk's meme potential and tapping into his genius, the market is looking forward to Tesla's new products this year. Musk is expected to unveil new vehicle models such as a semi-truck, a supercar, and a cheap electric car in 2022. He should also deliver more information about the long-awaited Tesla Cybertruck on the company's next earnings call. Any positive announcements from Musk should lift the company's stock. Currently, when it comes to electric vehicles produced worldwide, Tesla is the major player. The company has a market share of 15%, and that's followed by Volkswagen and General Motors. In 2021, the size of the electric car industry was $287 billion. Third-party research firms expect this to grow to an amazing $1.3 trillion by 2028 at an impressive CAGR of 24%. Tesla is the biggest player in this industry due to its cutting-edge technology and customer loyalty. That means it will naturally be a beneficiary of this industry's growth. However, keep in mind that strong competition from other big EV players like Lucid and Rivian, as well as from traditional automakers like Ford, can pose a threat to Tesla's frenetic growth. Tesla has been one of the market's best-performing stocks since 2019, when the company's production of electric vehicles really ramped up. But its shares started their run-up already at a steep valuation and have only become more expensive in the meantime. Tesla's stock is now priced at 330 times trailing 12-month earnings and nearly 130 times its projected per-share profits for 2022. Except maybe it's worth the premium. While stepping into the stock at its persistently rich price can feel more than a little uncomfortable, the folks doing it may just have an incredible long-range vision of the EV movement. It's a bit difficult to believe with all the attention Tesla has garnered since it built its first EV back in 2008, but the company has only manufactured a total of around 2 million automobiles, and about half of those were made in 2021 alone. That's a fraction of the roughly 80 million vehicles produced worldwide every year. So it's surprising that Tesla boasts a higher market capitalization than the rest of the automobile industry combined, including titans like Ford, General Motors, and Toyota. But all these Tesla shareholders may know precisely where the business is going. EVs certainly are the future. Ford and GM will be deeper into the EV business in the near future, but Tesla is the current market share leader in the space. And it's the auto industry's only major EV name that isn't partially held back by a legacy combustion-powered vehicle business. So its shareholders have every reason to expect the stock to grow into its frothy valuation. Even if it trails the industry's broad growth, the company could produce and easily sell millions of electric cars in 2030. While the bullish undertow is there, that doesn't necessarily make Tesla an easy name to own. The stock still trades at a steep premium to 2030 plausible per-share earnings, and much can happen to stoke volatility in the meantime. High lithium prices are one of those potential stumbling blocks. Unforeseen legislation is another. Yet another prospective pothole on the road ahead is competition from the likes of the aforementioned Ford or GM seriously stepping up their EV games. 8 years is an awfully long time. Although everything is good news and nice figures so far, the electric car market will still have to establish important improvements and milestones, especially regarding pricing and charging infrastructure capacity, but also on the range, availability, and technology of its internal devices, such as the battery system itself, which still has significant room for improvement. But that doesn't take away the progress the EV car maker has made. 2021 was a great year for Tesla, and 2022 is expected to be even better. That's why analysts like Jim Cramer are bullish on the Tesla stock. So probably we'll have to wait and see how it plays out. Thanks for joining us today. Remember to like, share, and subscribe. We'll see you next time.